Alright, I've been Coin Chess and Wine here. It is Friday, October 15th, 2010. I'd like to do a video market wrap-up tonight, and you're looking at a daily updated chart of the S&P 500. And the first things first, we're in an uptrend. We've been in an uptrending market ever since we breached this key 1130 level that, as you recall, acted as very tough resistance throughout the course of the summer. Each kind of consolidation that we've seen has led to a higher leg up in the market here. So I'm simply going to respect that fact. I recognize that many people are looking to call a top, and it's not just bears that want to see this market top out or actually pull back here, but it's underinvested bulls who have missed a good chunk of this run because they were so concerned that the market was actually going to fail again at 1130 or at 1150, and in fact the market has kept going higher. So we have plenty of market players not only actively rooting for a pullback, but they're positioned for it, more importantly, in my opinion. So I think what I'm trying to do is resist the urge to fall into that herd. That doesn't mean that I'm just going to complacently just become a riverboat gambler and go all in with my portfolio on just any old stock here. But it does mean that I am going to respect this uptrend here, and I'm even a 3% correction at this point would not be enough to turn me bearish. As you can see, for an example, the rising 50-day moving average is all the way down to 1115. So my point is that we could actually see a fairly sharp correction here, and it would still be within the context of a bull run. And there's also, of course, the possibility that we do not see a sharp correction that many people are looking for, and you need to look no further than the February through April uptrend that we saw earlier this year, where at various points throughout the uptrend you could have easily called a top to the market. In fact, many people were looking to short the market, especially right here at this 1150 level, which, as you recall, is where we failed rather violently back in January. And many people tried to call this a bearish rising wedge back here at 1150 in mid to late March, and all that happened was those people who aggressively shorted the market, they got squeezed from 1150 all the way up to 1219 before we finally topped out. So my point, excuse me here, let me get back to the daily chart. My point is that despite the fact that you can call what we've got here a bearish rising wedge, I've just added this blue resistance line up top here to complement the support trend line. Despite the fact you can call this a bearish rising wedge, they usually resolve to the downside because we kind of just drift higher here in an amorphous fashion. Despite that fact, we're going to need to see more evidence that the market wants to actually roll over and top out here. We're going to need to see some heavy distribution. We're going to need to see some big down days with follow through to the downside. And as far as the S&P, I'm just not seeing it. Yes, there are some weak sectors. I know the financials are rather weak right here. But at the same time, there are plenty of strong pockets in the market. You can look at Apple. You can look at other key stocks there that are holding up very well. And then, in addition, you're seeing other key stocks that have formed bases and are breaking out here. And like the main argument that the bulls have right now, in my opinion, the main index that supports the bull thesis is the breakout of the transportation stocks. Here's a Dow Jones transportation average. And this is an area that concerned me for a while here because it took forever, even as the broad market broke out of the trading range in September, the transportation stocks actually took until early October to break out earlier this month. But the good news for the bulls is that the bulls have followed through to the upside on that breakout here. And we've got ourselves a confirmed breakout of the transportation stocks. And as you know, the transportation stocks are historically leading indicators in terms of the broad market. As I've been pointing out for many months now, even at the depths of this summer here in July, when things look very bearish, the transportation stocks never came close to taking out the February lows. So as a whole here, and I'm going to zoom out here to the weekly chart, we've still got an overarching broad series here of higher lows here at the very least, even though we had a pretty dicey consolidation period throughout the course of this summer here. And I recognize this is very messy here. We never made the lower low below the February lows. And that was one of the things that always irked me, but I continue to just respect the uptrend, and I'm trying not to call a top to the market.